watching the Shikama Live Show with your host, Shikama. You know, when I get questions about why are you doing that for black people, I assume the white person asking it is a liberal. Because I get white people who congratulate me, pat me on the back, ask can they use the information to, ask can they take it to their corporations and use it as training materials as conservative. Why do I say I think they're liberal, one's liberal and one's conservative? Because of the phrasing of the question. We need to run through the fields holding hands because I really feel that black people and white people need to just ignore color. Okay. When you get 100% of white people in the United States to go along with that, I'll stop making videos to tell black people how to be equal to white people. Because when you boil it down, that's what my videos are saying. How to be equal to white people financially, economically, in wealth, in income, in social status, in lifestyle. Yes, that's all I'm talking about. I'm not talking about your feelings, and I don't care about your feelings. So please stop talking about, I feel we need to run through the fields holding each other dick and making sure that we are blind to black and white. Okay. When you convince Mexicans and white people and Jews and Latinos and Asians to go run through a field with a black guy, all of them, then you can come onto my channel. Until then, please sit back, relax, and enjoy the 4 Black series. 4 Blacks! How big of a portfolio do I need to live on? Dividends in retirement. I have been researching dividends for about a month now. And I discover stuff and discover stuff and discover stuff. And I have a lot of time on my hands. I'm thinking about creating a series, and I want to ask everybody, would you be interested in following me? You don't have to invest yourself, but you could play along, where I create an income portfolio through dividends only, and you can watch me and the results for the next 2 years. Please leave a comment below, like the video so other people can see it, and also leave a comment because if the video doesn't get 1,000 views or 10,000 views, it's just useless. And I don't need people to say, you should do it anyway. Why should I do it if nobody is watching? I depend on people watching my videos. This is a business. This is my business. Would you keep your McDonald's open if nobody ever came through the door? You still have to pay light bills. You still have to pay water, trash, taxes, rent, mortgage, solar panel bill, construction bills. Would you keep that McDonald's open? No, you would close it down and declare bankruptcy for the business. Do you get it now? Do you get it now? You should do it anyway. Because we need it. Your need does not supersede my business. Thank you. Thank you for understanding that. Let's move on here. So yeah, I need you to thumbs up the damn video, leave a comment saying, yes, I would like to follow you creating a portfolio for 2 years for my amusement and entertainment and my enlightenment. How much does one need to invest before one's dividends pay for basic monthly expenses in retirement? I realize that there are a lot of variables, but this is a very general question. Okay, so that's the premise of the whole deal. What's going on here? Okay, so here's the response. You're correct that there are a lot of variables, but let's do some very rough math. We'll assume you're retiring today, and for simplicity, we'll ignore taxes. I'm going to post in my dividend thing, I'm going to post about taxes. So I'm not going to leave out taxes. We'll ignore taxes, which may not be a big factor anyway, thanks to the dividend tax credit. That only applies to Canada. Dividend tax credit only applies to Canada. Mr. Obama has made sure that he taxes everybody all the way down to $0. I know you're not going to get much taxes out of $0, but it goes all the way. It says $0 taxes. You all just love you some Obama, but I'm looking at the charts and they say $0. Hello, I don't know what that means, but apparently he's taxing $0. Let's further assume that your investment portfolio yields 3.75%. That's a nice percent. Calculate as total annual dividends divided by total market value. This is the yield of the Strategy Lab model dividend portfolio. Could you construct a portfolio with a higher yield? Absolutely. But in my opinion, a diversified portfolio of stocks yielding 3.75% is easily achievable without taking on excessive risk. Okay, you understand if the yield were higher, that we're talking about companies that probably are not blue chip companies, right? So by that virtue, they're probably not investment grade companies to begin with. Investment grade meaning that there is a lot of risk involved. They might yield more, but there's a lot of risk involved in there. Now we need to determine what your basic expenses would be in retirement, keeping in mind that a lot of costs, raising kids and paying the mortgage, for example, may well be behind you. Let's assume you can get by on $50,000 for basic expenses such as food, property taxes, clothing, transportation, and utilities, which I have to pay here running this YouTube channel. Granted, this doesn't leave room for lavish Mediterranean cruises or a new Lexus every few years, but you won't be eating cat food either. Okay, here we go. My family of four, for example, lives comfortably on less than that. I know this because I have tracked our expenses for the past several years. Pause. Have you done that in your life? I mean, do you do this normally? Not normally, right? And don't say, I keep a running measure in my brain. No, that's not good enough. You're just being lazy. Continuing, I recommend that you do the same. It's the only way to know how much money is actually going out the door. One of the easiest ways to track your spending is to keep all of your bank and credit card statements and then review them each year to see how much you've spent. Now, I asked you when I was talking about Obama one day, I said, take your paycheck before Obama came into office and 2012. Now see how much taxes. Now, of course, everybody that watched that video didn't do that because they don't keep track. They just think you just pay your bills and you go on about your business. No. Also, when I was talking about another thing, I said you smoke, keep track of how much you spend into cigarettes a year. And I mean keep actual, don't guesstimate, keep actual track of how much you buy, because sometimes you might skip a week or sometimes you might increase. And you can't remember, did you increase in June or was that all the way in May? And so your running tab in your brain doesn't come out right because you're missing $2,000 and you don't know why. Now the question is, how much capital do you need in order to generate that $50,000 in annual income, assuming a yield of 3.5%? The answer is $50,000 divided by 0.035 or $1.33 million. Think you could get by on $40,000? You'd need a portfolio of $40,000 divided by 0.0375 or about $1.07 million. If you assume a higher dividend yield of say 4%, you'd need a portfolio of $40,000, 0.04 or $1 million. You can play around with the different scenarios on your own. The general formula is X over Y equals Z, where X is the annual expense, Y is the portfolio yield expressed in a decimal, and Z is the required portfolio value. As long as you know two of these numbers, you can solve for the third. What about inflation? Well, if you own stocks that raise their dividend regularly, as many pipelines, utilities, banks, and consumer companies do, your income will grow and protect you from rising prices. So it's a kind of a built-in inflation proof. I don't want to really say inflation proof, but it's kind of built. You get the idea. Bear in mind that most investment professionals recommend that you also allocate a portion of your portfolio to bonds or guaranteed investment certificates. Right now, this is not a good idea. When the stock market takes a dive, you'll be glad you have them. Remember, too, that you may well have other sources of income in retirement, including Social Security, stuff like that. So you probably won't have to rely on dividends for all of your spending needs, but having dividend income in retirement will certainly help. There are a lot of moving parts here, and this analysis is general in nature and not meant to be taken as specific investment advice. A good financial planner can put together a comprehensive plan that addresses your specific situation. What I will be doing is I will be taking, here's the exact formula I'm going to be doing, but it's going to be weighted. So I'm going to have 10 high yield dividend stocks, 20 mid-yield dividend stocks, 10 blue chip stocks. Now, the 10 blue chip stocks can fall in either one of those categories of the 10 and the 20. Now, the weighting system will be graded on growth rate, yield growth, cash flow, profit, PE ratio, EBITDA, years of steady or rising dividends, 10-year earnings per share growth rate. Now, there is some very good, now you already saw I did a video on REITs. If you haven't seen that, please go see that. Of course, it has a big Canadian flag there. If you would like to see that, leave a comment, thumbs the video up, and share the video. I can't do anything if you all don't watch the video and you don't help other people watch the video. You know, these companies online, you know, they have to pay for computers, right? They have to pay for everything. They have to pay. If people aren't interested, they don't just send out the video to everybody. Yes, I have 23,000 subscribers, but 23,000 people don't get it in their inbox. About 100 people get it in their inbox. And it is the case that the 100 people that I cater to don't ever share the damn video. I don't get it. Oh, this is really good. Let me make sure I don't share this with nobody else. I know you're older. You don't get it. That's why I'm explaining it to you. You have to share. Anyway, if you're interested, I hope this information was good. Now, a lot of you are going to say, who has $2 million? Who has $1 million? Well, if you put your money just in the bank and saved it, you would have 2 million, 3 million, 4 million, 5 million by the time you got ready to retire. That's without doing anything else. Just putting it in the bank, even with a bad interest rate. Over the course of working, you get $4, $5, $6, $7 million that pass through your hand. Go ahead and calculate it. Take all of your life and then do 40 years, 50 years, and then calculate it. Go ahead. $1 million, $2 million, $3, $4, $5, $6, $7, $8 million pass through your hand. So by the time you retire, you should have $1 million at least. If not, you're failing at life. I just got through watching several videos of teenagers making $400,000, $500,000, $600,000 in a matter of months, couple of years from trading stock. So yeah, they didn't have the benefit of 50-year head start. You have the benefit of a 50-year head start. And yes, I believe what kind of life do you live if you're making $20,000 a year? If you're making $20,000 a year, you worry about everything that you pull your pocketbook out for. Am I right? Tell me I'm wrong. How many of you go to the grocery store and just put stuff in a basket and don't even look at the price? If you make $20,000 a year, you look at every price tag. You don't buy a shirt. You don't even go into certain stores at all. You are failing at America. Now, I'm not talking about you need to be a big, huge consumer. I'm talking about there are expenses that you can't pay. I'm talking about expenses. I'm talking about bills. People going upside down in cars. How do you go upside down in a car? And then you can't pay it off. You have to declare bankruptcy because you are a fool with a car. That's not even a house. You can buy $100 car. Right? Anyway, thank you for watching Chicama Live Show. You have a wonderful day. I hope everybody is happy. And I hope you use this information. Thank you for watching Chicama Live Show. If you're interested in that series, you better say something. Otherwise, I'm going to move on to Justin Bieber. And I'm not even kidding.